Time now for business. I'm pleased to say Kate Moody has joined us. Good evening, Kate.
Hi, Mark.
Yet another rather gloomy outlook for the global economy. Tell us more.
Well, it's not the first, and nor I would say the last, Mark. The World Bank is the latest international organisation to once again downgrade its forecast for the coming year. The global economy is predicted to expand 2.6% this year and 2.7% next. That's cuts of about 0.3 and 0.1% respectively. The US, Eurozone and Japan are seen as weakening, in part due to weaker exports and investment. Now, for more, we can cross to London and speak to Franziska Ohnsorge, lead author of that report and manager of the Development Prospects Division at the World Bank. Thanks for being with us on France 24. How big a role have trade tensions played in your latest downgrade?
We had already expected 6 months ago a slowdown, darkening skies over the global economy. And then it was a forecast. Now we really see it in the data. That explains the 2.6% growth forecast for 2019, which is the weakest in 3 years. The last time we saw such weak growth was in 2016. So we have always expected a slowdown. That's a natural cyclical downturn from a stimulus-induced high in 2017 and 18. That it would be that steep was unexpected, and that accounts for our downward revision. And it's really something that is broad-based, that cuts across the globe, across all groups of countries. And you're right, the weakness of global trade is perhaps the most striking feature of the current global economic environment. The trade growth in 2019 that we currently expect is the lowest since the global financial crisis. It is even lower than in 2016, which was a troubled year for the global economy. And part of it, again, is just a simple cyclical slowdown. But on top of that, trade tensions or policy uncertainty more broadly has really weighed on manufacturing, industrial production, trade and investment, especially in emerging markets and developing economies.
How are emerging economies faring in this trade war, which for now has engulfed the US, China, the Eurozone? How are smaller economies faring?
Yes, I mean, emerging markets and developing economies are also facing lower growth. Growth is likely to be on the order of 4% this year. And we've also revised it downwards by 0.3 percentage points. The challenge with the current bilateral trade tensions is that it is happening between the largest economies in the world. The US and China, for example, account for 20% of global trade and 1/3 of global GDP. So if these two giants in the global economy have disagreements, and disagreements that could put in question the whole rules of trade, the whole viability of supply chains, that is something that reverberates around the global economy and actually around the World Bank's client countries as well, the emerging markets and developing economies.
Your report also highlights the growing problem of high government debt loads. What should be done to tackle that issue?
Yes, so government debt in emerging markets and developing economies has grown by 15 percentage points since 2007. And that's a broad-based issue. It's not just focused on a few large countries. In 60% of emerging markets and developing economies, government debt is now 10 percentage points of GDP higher than it was in 2007. That means that these countries are now less well prepared, or they will face greater challenges in meeting the next financing shock when it comes. What can governments do? There are three options. One, should they borrow more? That's question one, and that really depends on the country. Some countries can afford it, others cannot, even if all of them need more investment. Second, can they borrow better? And yes, most countries can borrow better. They can borrow in a more transparent fashion. They can borrow longer term. They can borrow in local currency rather than foreign currency. And the third question is, can they go beyond borrowing? What can they do beyond borrowing? And that is really about finding resources for growth-enhancing expenditures beyond borrowing. So that's raising domestic revenues. That's increasing expenditure efficiency, shifting expenditures from unproductive towards growth-enhancing expenditures.
Franziska Ohnsorge of the World Bank, thanks so much for joining us on France 24 this evening. Just got time for the closing word on Wall Street now. We saw huge gains for US stocks, their second best session of the year. The Dow Jones has jumped 500 points, up over 2% on the close. The tech-heavy Nasdaq gaining 2 2/3%. Investors were boosted by comments from the head of the U.S. Federal Reserve that the central bank would be open to cutting interest rates again if economic conditions warranted it. We saw a slightly more modest session here in Europe, boosted by the auto sector, though. The Frankfurt DAX outperforming up 1.5% on the close earlier on, Mark.
Kate, thank you very much indeed. Kate Moody with all the business.